Hello everyone, we are going to discuss about the previous year question of Corporate Accounting 2 from University of Madras in April 2016. The subject code is BPW4A Part C. This question is from holding company accounts. Let me read the question. From the following balance sheets relating to H Limited and S Limited, prepare a consolidated balance sheet. Balance sheets are as on 31st/12/1992. In the liabilities side, share capital, shares of rupees 10 each, 10 lakhs to H Limited, 2 lakhs to H Limited. Profit and loss account 4 lakhs to H Limited, 1,20,000 to H Limited. Reserves 1 lakh to H Limited, 60,000 to H Limited. Creditors 2 lakhs to H Limited, 1,20,000 to H Limited. Bills payable 30,000 to H Limited only, and the total liabilities are 17 lakhs to H Limited, 5,30,000 to S Limited. In the asset side, sundry fixed assets 8 lakh to H Limited, 1,20,000 to S Limited. Assets and stock 6,10,000 to H Limited, 2,40,000 to S Limited. Debtors 1,30,000 to H Limited, 1,70,000 to S Limited. Bills receivable 10,000 to H Limited. Shares in S Limited at cost 15,000 shares. The amount is rupees 1,50,000 to H Limited, and the total assets are 17 lakhs to H Limited, 5,30,000 to S Limited. And all profits of S Limited have been earned after the shares were acquired by H Limited, but there was already a reserve of rupees 60,000 on that date. All the bills payable of S Limited were accepted in favor of H Limited. The stock of H Limited included rupees 50,000 purchased from S Limited. The profit added was 25% on cost. And the notes: H Limited is a holding company or purchasing company. S Limited is a subsidiary company or selling company. Revenue profit is after acquisition profit or post acquisition profit in bracket after the date of acquisition. Capital profit is before acquisition profit or pre-acquisition profit in bracket before the date of acquisition. First, we are going to calculate the holding minority ratio. H Limited acquired 15,000 shares from S Limited. This information is in the asset side of H Limited in balance sheet. So the total number of shares of S Limited, the amount of shares of S Limited is 2 lakhs. The price per share is rupees 10. So 2,10,000 divided by 2 lakhs divided by 10, we get 20,000 is the total number of shares of S Limited. So the holding portion of share capital equal to 15,000. Minority portion of share capital equal to total shares of S Limited minus the holding portion of share capital. So 20,000 minus 15,000. Minority portion of share capital equal to 5,000. So holding minority ratio equal to 15,000 is to 5,000, or 15 is to 5, or 3 is to 1, or 3 by 4, 1 by 4. 3 by 4 for holding, 1 by 4 for minority. And second, we are going to prepare the capital profit. S Limited subsidiary on the date of purchase, it means pre-acquisition or before the date of acquisition. This information is in the adjustment of the question. It means when the company is a holding company is going to purchase the subsidiary company shares, that time the S Limited shares was the S Limited's reserve was rupees 60,000. That is considered as the capital profit. So the holding portion of capital profit equal 60,000 multiply with 3 by 4. The amount is rupees 45,000 and minority portion of capital profit equal to 60,000 multiply with 1 by 4 we get 15,000. And we are going to calculate the revenue profit S Limited subsidiary. The total profit and loss account is rupees 1,20,000 which is from the balance sheet, and the total reserve rupees 60,000. The total amount is 1,80,000, 1,20,000 plus 1,60,000. So we get the total value of 1,80,000. Then less capital profit, which we have already calculated. The amount is rupees 60,000 will be less with the above amount. So 1,80,000 minus 60,000 we get 1,20,000 as revenue profit. Then holding portion of revenue profit equal to 1,20,000 multiply with 3 by 4 we get 90,000. Minority portion of revenue profit equal to 1,20,000 multiply with 1 by 4 we get 30,000. Then we are going to calculate the minority interest. S Limited subsidiary minority portion of share capital of S Limited equal to total amount of share capital of S Limited multiply with 1 by 4. So 2 lakhs multiply with 1 by 4 we get 50,000. Minority portion of capital profit 15,000. Minority portion of revenue profit 30,000. The total amounts are 95,000 is minority interest. Then we are going to calculate the capital reserve or goodwill. Amount paid to S Limited for purchasing shares by H Limited. The amount is rupees 1,50,000, which is from the asset side of H Limited in balance sheet. So it is mentioned as in the asset side of H Limited in balance sheet. Shares in S Limited at cost 15,000 shares in asset side of H Limited. Then less face value shares purchased by H Limited from S Limited. The holding portion of share capital equal to total share capital of S Limited multiply with 3 by 4. So 2 lakhs multiply with 3 by 4 we get 1,50,000. Then holding portion of capital profit 45,000. So the total deducted value is 1,95,000. It means 1,50,000 plus 1,45,000. So 1,95,000 will be less with the above amount of 1,50,000. So we get the negative value or minus value. So if there is any negative value or minus value, that is called capital reserve. If there is any positive value, that is called goodwill. But in this question we found capital reserve amount. Then we are going to calculate the provision for unrealized profit in stock. So there are two formulas. One formula is profit percent on cost from value of stock equal to value of stock multiply with the percentage value given divided by 100 plus percentage value. And the method 2, profit on sales from value of stock equal to value of stock multiply with percentage value divided by 100. So this is the second method concept, that is profit percentage on cost method. So H Limited purchased stock from S Limited is 50,000. Profit added was 25% on cost. So profit percent on cost equal to value of stock multiply with percentage value divided by 100 plus percentage value. So the value of stock is 50,000 multiply with 25 divided by 100 plus 25. So we get 50,000 multiply with 25 divided by 125. So we get the unrealized profit. The amount is rupees 10,000. Then we are going to calculate the notes to account. Note number 1 is share capital. H Limited holding 1 lakh multiply with 10 we get 10 lakhs. Then note number 2 is reserve and surplus. Before going to calculate the reserve and surplus amount, we should know the notes information. Unrealized profit from stocks amount will be deducted in both reserve and surplus and stock. Then under the reserve and surplus, H Limited holding reserves 1 lakh plus a capital reserve which we have already calculated. This is from the working notes 5. that amount is 45,000. We have to add this amount, we get 1,45,000. 1 lakh plus 45,000, we get 1,45,000. Then plus H Limited holding profit and loss account 4 lakhs, holding portion of revenue profit 90,000. The total value is 4,90,000. Then minus unrealized profit from stock, the amount is rupees 10,000. That amount will be less with the inner column total. So 4,90,000 minus 10,000, we get 4,80,000. So that is mentioned in the outer columns. Then after mentioning that amount, so we have to less the 4,80,000 from the above amount of 1,45,000. So 1,45,000 minus 4,80,000, we not less add with the 1,45,000. So 1,45,000 plus 4,80,000, we get the total reserve and surplus of 6,25,000. Then we are going to calculate the trade payable. So before going to calculate the trade payable, we should know this notes information. Mutual obligation in bills. When we are going to calculate the mutual obligation in bills, we should know this information. Bills payable in S Limited in bracket subsidiary, bills receivable in H Limited holding. It means the bill of H Limited and S Limited has been exchanged or interchanged in both holding company and subsidiary company. So the equal value or lower value of amount of any one of the bill of both bills payable and bills receivable, the same amount will be cancelled in both trade payable and trade receivable respectively. So in this question, bills payable value of S Limited is rupees 30,000 and bills receivable value of H Limited is rupees 10,000. So in this concept, the lower value of rupees 10,000 will be deducted as mutual obligation in both trade payable and trade receivable because of so the first one is high value, so the second one is the lower value. So the lower value will be considered as the deductible value for both bills. And the second point is trade payable equal to sundry creditors plus bills payable. Then we are going to calculate the trade payable, that is note number 3. Under the trade payable, H Limited sundry creditors 2 lakhs plus S Limited subsidiary sundry creditors 1,20,000. We get the total sundry creditors value of rupees 3,20,000, which we have to mention in the outer column. Then bills payable of S Limited is 30,000 minus mutual obligation in bills 10,000. The left value of bills payable is 20,000. That amount will be added with the above amount of outer column. So 3,20,000 plus 20,000, we get the total trade payable amount of 3,40,000. Then note number 4 is tangible assets. Under the tangible assets, H Limited holding sundry fixed assets 8 lakhs plus S Limited subsidiary sundry fixed assets 1,20,000. The total tangible assets are 9,20,000. Then we are going to calculate the stock value. So before going to calculate the stock value, first we should know this notes information. So unrealized profit from stocks amount will be deducted in both reserve and surplus and stock. So under the stock, H Limited holding stock value is 6,10,000 plus S Limited subsidiary, the stock value is 2,40,000. We have to add this amount, we get 8,50,000. Then less unrealized profit from stock, the amount is rupees 10,000, will be less with the above amount. So 8,50,000 minus 10,000, we get 8,40,000 as the total stock value. Then we are going to calculate the trade receivable amount, that is note number 6. So first look at the note, trade receivable equal to sundry debtors plus bills receivable. So in this question, bills payable value of S Limited is 30,000 and bills receivable value of H Limited is 10,000. So in this concept, the lower value of 10,000 will be deducted as mutual obligation in both trade payable and trade receivable. Under the trade receivable, H Limited holding debtors 1,30,000 plus S Limited subsidiary debtors 1,70,000. So the total debtors are 3 lakhs. So 1,30,000 plus 1,70,000. And bills receivable H Limited holding 10,000 minus mutual obligation in bills 10,000. The value is nil. The total trade receivable amount is 3 lakhs. Then we are going to calculate the consolidated balance sheet of H Limited and its subsidiary of S Limited as on 31st/12/1992 as per revised schedule 6. So first we have to mention equity and liabilities, that is Roman letter 1. Under the equity and liabilities we have to mention shareholders funds. So under the shareholders funds we have to mention share capital, that is note number 1 heading, and the note number 1 total is 10 lakhs. And we have to mention reserve and surplus, that is note number 2 heading, and note number 2 total is 6,25,000. Then minority interest, that is working notes 4, which we have already calculated. The amount is rupees 95,000. And we have to mention current liabilities. Under the current liability we have to mention trade payable, that is note number 3's heading. Note number 3 total is 3,40,000. So the total equity and liabilities are 20,60,000. It means 10 lakhs plus 6,25,000 plus 95,000 plus 3,40,000. Then we have to prepare the assets, that is Roman letter 2. Under the assets, the first one is non-current assets. Under the non-current assets we have to mention tangible assets, that is note number 4 heading, and note number 4 total is 9,20,000. And we have to mention the current assets. Under the current assets, stock, that is note number 5th heading, and note number 5th total is 8,40,000. And we have to mention trade receivable, that is note number 6th heading, and note number 6th total is 3 lakhs. Then we have to add all the assets amount. So we get the total assets of 20,60,000. It means 9,20,000 plus 8,40,000 plus 3 lakhs. That's all.